Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and we're getting an update on the silver market today from Peter Krauth. He is the author of the book, The Great Silver Bull, and editor of Silver Stock Investor, the newsletter that he sends out to subscribers, where he dives into all things silver, not just the price of silver, but also storing physical metals as an investment strategy, and then, of course, getting down into the silver stocks. And Peter, it's great to have you on the show again for an update. We were just looking at it when we had talked last in early April. Silver was just butting its head up around that $26 resistance area and looking like it could break out. And we both felt pretty encouraged that it was looking like this was the move where it was going to have the juice to do so because gold had already broken out. And then since we've talked, Peter, not only has it broken out above 26 and 28, but it's actually finally cleared the $30 psychological resistance level and technical resistance level up over 32 at the time of this recording. So let's maybe start there. We finally have a breakout in silver. What do you make of it?
Well, Shad, thank you for having me. And yes, we absolutely do have a breakout in silver. This is really big news because, silver has tested sort of the 28 to $30 range three times. First time was, well, in sort of the last several years. The first time would have been around August or so of 2020 in the post-COVID pandemic panic run up when it went from about $12 in March to $30 in August. That was an incredible 140% return in about 5 months. Then we had the silver squeeze, which was not sustainable. And that's what I told subscribers at the time. There was no real sort of fundamental drivers for that. But still, it tested the $28 to $30 level at that point. And then again, just recently, when, as you say, it ran up through 25, 26, early April, tested 29-ish, right around mid to late April, dialed back slightly, and then just soared right through 30, and now we're at the $32 level. This really is a big deal. Like I say, you have to go back something like 11 years to see the last time before this sort of 4-year period when silver was at $30 for the last time. So that would bring us to around 2013 or so. And so, yeah, a really, really big deal. I think that now that we've crossed this level, we can hold above 30. 30 will absolutely become a new floor in my view. And then we're in not, I wouldn't say uncharted waters, but almost, because after that, the next sort of real true psychological technical level would be 50. That's a long way off, but well, let's not get ahead of ourselves. There's a lot of fun to be had in the meantime on the way there.
Yeah, great point, Peter. And we've been waiting so long in the precious metals community to see a solid break above 30 that's sustainable, that let's just enjoy silver in the 30s right now. I know a lot of the mining companies will, but so will investors that stack the metal. I'd like to ask you what you think is actually driving this move higher, and then more importantly, what'll continue to move higher, because we know that silver is a precious metal, but it's also an industrial metal. It's got that hybrid nature to it. And then there's also the potential, a lot of people have mentioned, maybe it's just a short squeeze here when you look at things like the COT reports and look at where people are positioned. What do you think is driving silver higher right now, and what will sustain it to keep moving higher?
So I think there actually are multiple drivers kind of that have all come together at the same time. Like you said, gold has run up. It hasn't moved recently to the extent that silver has, if anything on a percentage basis, but because it's near the 2400 level and really sticking quite close to that is close to all-time highs. I think that we're starting to see silver catch up like it tends to do in precious metals bull markets. Then you have the industrial demand side, which has been extremely robust. People need to know that silver has become increasingly an industrial metal, whereas maybe about 10 years ago, it was about 50% industrial demand and about 50% pretty much all the rest. I lump the rest into different versions of investment. By that, I mean coins and bars, physical investment, silver jewelry, and then silverware. And then the industrial side really encompasses several things. We're talking about medical applications. You have industrial applications, electronics and electrical. And you also have the really, really big sort of elephant in the room is solar, because solar has just grown by incredible, blistering leaps and bounds. to where solar is now 20%, requires 20% of all of the silver supply every year. From 2022 to 2023, solar demand for silver grew by 64% in 1 year. It's just incredible. People need to know that this is one of the very big drivers for silver and silver inventories. We can tell by multiple sources. They, what I call secondary inventories, above ground inventories, they have been dwindling, and we've seen them come off by hundreds of millions of ounces. There's been, if we include this year, there will have been 4 years in a row of structural silver deficits in the silver market. So as I say, multiple drivers, and I can go into more things. I'm sure we'll have a bit of a chance, but there are even other things that are, I think, driving silver as well right now.
Yeah, some great points there on both the investment demand side and also on the industrial demand side. There is a little pushback we get sometimes, Peter, when we talk about silver being in a deficit, because we have folks on the show that say there's no deficit in silver, there's plenty of above ground silver, and what you're seeing in the COMEX or the LBMA or what you're seeing in the Shanghai are only some of the above ground stockpiles, and people fail to report on all of the other metal repositories that there are held in multiple states. Some are in Florida, some are in Arizona, and those don't ever show up in those reports. So what would you say to people pushing back on the idea that there's plenty of silver above ground?
So, I mean, I would not argue there is plenty of silver above ground. The question becomes, at what point are the owners of that silver willing to part with it when the, I guess, more obvious stated supplies ultimately end up running down, running dry or close to zero? I don't think they would get, really to zero before alarms go off. And what I do think is that these other inventories that you mentioned that are not necessarily reported, I have, it's a sense only, and I admit that, but I have a sense that people who own that silver are not going to be willing to part with it until silver is at much, much, much higher prices. So it's all fine to say, yes, it's true. We've been draining the COMEX, we've been draining LBMA, we've been draining the Shanghai, and we've been draining silver ETFs. But we've got the secondary inventories, and that's going to help meet demand when these other sources run too low. Again, I'm not convinced. I think that we are in some kind of a new paradigm where the holders of that silver understand the value of it, understand how dramatically undervalued that it is. And so ultimately, yes, it's true. Many of those ounces could come to market and help meet demand. But again, I only think that will happen at much, much higher silver prices. I think it's unrealistic to not account for the high risk that things would play out in that fashion.
Well, let's even look ahead to $50 silver because that's where all eyeballs are turning now. For the longest time, it was at 30, but everybody that looks at the charts knows there's really not a lot of pricing resistance between 30 and 50. Yes, there's some in the mid 30s, and we'll probably trade around in this area for some time before finally breaking higher. But once you get in the 40s, everybody's going to be looking at 50. I think the all-time highs was $49 each time back in the 1980 high and also in 2011. So $49, $50, that range. Everybody's got their sights set on there. Is that a level where a lot of people would sell and come back to market and say, hey, maybe you get stuck here, time to dump my silver? Or do you think we're talking much higher levels, even beyond 50, where people finally come to market with their silver?
So I think that yes and yes. I think that at around 50, I personally do not expect that we're going to soar through it and not look back. I think that it will, much like 30, represent a some overhead resistance for a while. It'll test that level several times. I mean, I could be wrong, but that's just the sense that I have because it's been, a multi-decade ceiling. In fact, it's the all-time high for silver. So again, I would expect that to be tested several times. It could take quite a while to eventually break through it permanently. And yes, some people have held their silver for decades and may have paid somewhere close to $50 for it. And despite the fact that, they could get $50 for it, let's say at some point in the future, let's say it's a year or 2 years from now. And it would be unrealistic for them to say, well, I'm getting my money back, because they're not getting their money back. $50 today is not worth $50, from say 30 or 40 years ago. So they're kind of fooling themselves, but some may not care. And I would expect a fair bit of silver would come to market at that level, simply because you have so many people who've held on for so long. And that would contribute, I think, to silver having a hard time getting above 50. So that's kind of how I see it. Like 30, once 50 would ultimately become a new floor for silver, then I think that we're talking very, very strong hands holding silver as of that point. And I think that it'll have to be considerably higher than 50 afterwards for those holders to ultimately part with their silver.
All right, I appreciate you breaking that down. And yeah, I think it's going to be a key
Sure.
level to watch, both technically and just from a supply demand picture, and just to see how markets react there. But probably won't be easy sledding to get through it the first attempt, just like 30 has taken a number of times. Probably the same thing for 50. Let's talk about people that invest in silver. I get a lot of questions where people email in, should I just buy the ETFs or should I hold the physical? Obviously, most people lean towards holding the physical, but that sets up a different set of requirements of where do I store it? How do I store it? Should I pay somebody else to store it? Should I have a custodian? Can I get delivery of it? So, what would you say to simplify it for people listening in as far as stacking silver both physically and electronically?
So I understand and I do think that it makes sense to hold at least a little bit of physical silver. That's the idea, is that you've got control over it, direct control, and that you have access, etc. The moment it starts to become larger, more sizable amounts, then I absolutely would recommend using some kind of a custodian. There are several out there. People should do their research and make sure, read reviews, and be sure that they're dealing with someone who is both reputable and has a long-term good sense of customer service and great reviews, and just sort of a high quality service. Again, there are several out there. When it comes to ETFs, really, it's a derivative of silver, to be fair. Despite, the way some of them may be presented, you're not buying physical silver. To me, that's already, there are three levels we've already talked about. So the first one is having a little bit under your own control. The second is having some that you personally own that is allocated. That is something you would want. Ask the custodian to make sure that it is allocated to you in your name. It is not commingled with other people's silver, so that the day that you call for it, that they have to say, oh, well, all right, let me see. I'm going to go get a few bars that represent what you have bought. Instead, you want to have your own bars and have the actual bar numbers or coins, etc., that belong to you. So that's allocated silver. And then when you talk about physically backed silver ETFs, they are not all the same. Be careful. Do your research once again. Here is a place where I'm willing to give a name, and that is the Sprott Physical Silver Trust. I believe that is, especially for North Americans, probably the best of all of the physically backed silver ETFs. And so that is one that I would absolutely recommend. Yeah, I mean, in terms of those options, when you look at silver or some sort of a version of physical silver, those are the best ways, I think, to go about it.
Well, and just for people listening in, that ticker for the Sprott Physical Silver Fund is PSLV. So different than SLV, it's PSLV, and that's the Sprott fund that Peter was referencing. All right, let's shift over to the mining stocks, because a lot of people listening are excited about the move in silver, but they're getting more animated about what this could mean, silver being in the 30s for the silver stocks. I know that we can dive into different stages of companies. Let's start off with the producers, Peter, because at $32, I know that some of them have higher costs and have it dealt with inflation, but they should be making money at this point in the mid 30s. What do you
Right.
think about the producers here?
Yes. So the producers have seen tremendous leverage when things started to kick in. In fact, it's interesting because the way I have the portfolio set up, the way I track it for my newsletter, I have it set up where I have the large producers at the top, listed at the top. Then I have my next group below that is the sort of mid-tier producers. After that, below them, I have the developers. And then ultimately, the last group is the junior explorers. And so this helps me see when we've got a lot of really strong action up or down, which ones are moving first and to what extent. And I can tell you that when we started to rally, because the bottom was right around February 28th or 29th. And when things started to rally into March, I clearly saw that it was the large producers that were getting the first kick from this run up from this rally. And then you could see that the mid tiers came in after, the developers after that, and then finally the junior explorers. So I still see a lot of opportunity in the juniors. They have some of that have had tremendous runs, but they were also, to be fair, they were also the ones that were the most beaten up over the last few years. So they've had some great runs, but it's not, by no means is it too late. There are many of them are still very attractively priced, and it's the kind of space that you'd want to kind of dip your toe in gradually, I think. Do your research, maybe pay for some research to get a little bit of guidance, and start looking at companies that make sense, that fit your requirements, your risk tolerance, etc., and decide, for example, how you would build your portfolio. I mean, one of the recommendations I could give if someone is perhaps uncertain how to start, if it's kind of new to them, my book really talks about how I build a silver portfolio and how I allocate across the different market caps of companies, and how I would not go beyond a certain percentage of the overall silver portfolio to any given company, depending on its size. So, that is one way to get some guidance of, and again, I'm not giving people individual personal investment advice. I'm simply saying this is how I do it, how I would do it. And it's a bit of a rule of thumb of how you could go about doing that. And so if you haven't done that, maybe take that approach. And then once you've decided, okay, I'm prepared to buy X number of, say, juniors, for example, what dollar amount you would put in. And by the way, juniors, I would not go less than at least probably 5 different names, because they're so volatile and you can't really know how they will pan out. Decide on a dollar amount for each junior, and then you can layer in. That's something I would also recommend. If it's, say, $1,000 or $3,000 per name, don't necessarily take that whole amount and put it all into that one name immediately. Buy in gradually. Do what's called dollar cost averaging, and perhaps put in a third now. Watch it for weeks, perhaps a month, or even a month or two. Look for an opportunity for a second tranche to invest, and then ultimately, over a span of a few months, perhaps buy your last tranche and be eventually fully allocated. And if you're lucky enough, and we've had that happen to a few names in the portfolio where they've doubled, take 50% of the name off, sell half of your shares, bank that cash, and sit there with, as I call it, the house's money, that's still invested in that company. You're at zero risk at that point. And so you get to participate with zero risk. You've got your money back, and you could even consider taking some of those proceeds and look to diversify into a new name, for example. So these are some different ideas of how you can go about investing in this space.
Yeah, Peter, some great ideas for portfolio diversification, buying in tranches. You can layer in and layer out of these positions. You don't have to do it all in one motion. And, looking for good setups where you can get a better cost basis in a company over time by watching, for pullbacks and buying opportunities. Just a couple questions here, just following up on the different stages of companies. I will get to the developers and explorers next, but just specifically on the
Sure.
producers, because there are those more senior producers and there's also junior producers. There's really kind of two camps, and there's a school of thought that says, hey, you sometimes want to get into the companies that maybe aren't the best, lowest cost producers, but when metals prices start rising, their margins are actually impacted in a more significant way, a bigger percentage impact of their margin expansion than, let's say, a better run company. And we see that every time. Just even recently, the last couple months, some of the highest cost producers have outperformed the better companies. So what do you think about that idea of mixing in not just quality, but also maybe some of the lesser quality companies, higher cost operators that see the most
Right.
margin expansion?
So those are great points, and absolutely, those are the kinds of things that I see and am aware of and track pretty regularly. In fact, there are a couple of examples of that. One is Endeavor Silver, and the other is First Majestic. Now, I'm going to say about 3 or 4 weeks ago, I was just shocked. I was actually in Vancouver for a conference, getting ready that morning, and this was the day before the conference actually started, and I'm looking on my computer, catching up on things, and I see that Endeavor Silver is up 20%. This is that morning, and I'm thinking, is this possible? This is like $1 billion market cap company. It just added $200 million to its market cap. And sure enough, it had triple the normal volume. And yeah, I mean, they are a higher cost producer. So I believe that is absolutely part of what was going on. Some savvy investors have been following it. It has plenty of liquidity. It's a larger sized producer. It's not the largest. It's sort of a medium one, I guess, for silver, but plenty of liquidity. And I was just shocked to see that a company that size could be up that much in a matter of a few hours. And I think that what happened was some well-heeled investors had been tracking it for probably as much as several quarters or a year. They had a little bit of a tougher time the two prior quarters, running into some issues with inflation. Their costs were up. And so it was that day that they had reported their first quarter. And it wasn't gangbusters, but it had kind of flipped from a bit negative to a bit more positive. And I think that was enough really for all of these companies that were looking to get into silver and something with a lot of leverage to the silver price because they are a higher cost producer and they've just run up tremendously. They've caught up at a pace that is just unreal. And that's one of the things that I think is typical of the silver market. People will say, and they'll compare it to other markets and think, oh, I'll just kind of wait for silver to start running. And when I see that happen, then I'll get into these stocks and I'll take advantage. Well, I think that's a mistake because these run-ups come so fast, so unexpectedly sometimes that if that's what you're waiting for, you're likely to miss a good chunk of those gains. I think it is wiser to start allocating and have in the back of your mind that you will need to be patient. It may not go necessarily in the direction that you want immediately, but at least have some exposure to some of these names because when it turns so hard and so fast that you want that exposure. Something else that was interesting about Endeavor is that they are, in terms of producers, they are one of the highest silver content producers. It's interesting for your listeners to know that trying to find a primary silver producer or explorer is a tough task. I do this all day, every day, and it's a real challenge because only about 30% of silver comes from primary silver mines. The other 70% of mined silver is actually a byproduct of mining gold, copper, lead, and zinc. So, I mean, if a company is producing silver, I want to see at least 40% revenues from silver. And if a company is exploring for silver, I want to see at least 40% of a deposit of the resource being silver in terms of value. So Endeavor is actually quite high in terms of silver percentage. Same for others. And that's why when you see the move and you see, and they are companies that have a relatively high cost, like you mentioned earlier, the leverage is just tremendous. So yeah, these are some names to watch. Absolutely.
All right, I appreciate you breaking that down. And I think another key driver for Endeavor Silver is that they are building a big mine that's going to lower their cost and increase their output with Terronera. So that's another big company maker. We've seen a couple of those in the gold space, but we're also seeing it with the silver space. So that can be another catalyst to move the companies along. Let me also ask you about developers. So at the development stage, these companies have defined some ounces in the ground. They may have an economic study out, maybe a PEA, a PFS, a feasibility study, but they haven't maybe moved as much as some of the other companies yet, and their ounces in the ground are really at a silly level right now compared to where they've been historically. Do you like the idea of optionality, the optionality of development stage companies?
Most definitely. I mean, that's where you have more juice, so to speak, over the producers. And I think that we have yet to see a consolidation phase M&A in the silver space. It's almost been completely absent for a number of years. And I think that the challenges that there are in terms of finding silver, bringing mines to production are so strong. There's such big challenges that we are going to start to see some serious M&A happen. And they are, I believe, those developers are the most obvious targets because they've obviously next to juniors, they are much lower on the risk spectrum. They have deposits, they're advancing them. They're going through it's you could consider it sort of the more boring part of the Lassonde curve, but nonetheless, they are advancing these projects and de-risking them and making them more and more attractive to the larger producers. So I think that we're going to see at some point that whole subsector of silver equities move pretty tremendously, and it could cause a lot of FOMO, a lot of fear of missing out. And so again, there's only a small group, and there's an interesting saying by Doug Casey, which I think is very much applies to silver equities. And he likes to say that it's like trying to push the contents of Hoover Dam through a garden hose. There's so few good silver equities that when people really decide they want to pile into silver, the FOMO effect is just going to be off the charts.
Well, I'm excited to see the contents of the Hoover Dam come through the garden hose of the silver mining stocks. That's going to be exciting for all of us. And yeah, it's going to be nice to see more M&A in the sector because really the mergers and acquisitions we've seen in the silver space over the last decade have been silver companies acquiring gold projects. It's been things like Fortuna buying Rox Gold for their gold, or you saw SSR Mining, which used to be Silver Standard, get into the gold space. Even First Majestic bought Jarrett Canyon, and Silver Corp recently acquired a gold development project. So it'll be nice to see silver companies buying silver development projects. And I hope that is the setup that we see in the future. As far as the exploration stocks, we don't really have time to get into that in this interview, Peter. I want to take a deep dive the next time we talk into the exploration world of silver and maybe get into some names and some areas and jurisdictions. So we'll table that for next time, but it was great having you on the KE report for an update on the silver markets. If people want to follow along with Peter, definitely click on the link below this interview. It takes you over to his services and also to the book that he has authored. And so definitely follow along with Peter for more information on how he's looking at the silver markets and playing it in his own portfolio. And until next time, Peter, looking forward to our next conversation.
Shad, as always, I really appreciate the opportunity to chat with you. And I certainly look forward to the next time. And yes, let's keep that on the agenda. We can talk about the juniors that time.